that karate belt walking by. Excuse me, sir. Anyway, my name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book, Stop Being a Broke Loser. It's on Amazon. And we're going to talk about this concept called risk on. Risk on my disc con. Risk on my Comic Con. There we go. So risk on is this concept where you just have to buy very unprofitable, highly speculative assets, and you just hold them and wait until the general Wall Street, clown show becomes risk on. Because at that point, they will start to buy, that being Wall Street, will start to buy highly speculative, unprofitable, share diluting trash stocks. Now, who is the freaking king of risk on? Jeremy Financial Education. I know I talk about him a lot, but he gives a lot of good examples for what not to be as a long-term investor. Now, let's talk about this concept, okay? When you're an investor, what are you looking for? You're looking for a profitable, preferably growing business that will be around in 10, 15, 20 years. Now, I know the longer you look out, the less likely it is to predict if a business will be there. You could be analyzing a business that you think could never go away. But guess what? After 20 years, there might be some disruption, some real disruption, not clown disruption like Tesla, that completely annihilates that business. So you have to choose very carefully, okay? Why do you want a growing business? Well, you want the future earnings of your business to be greater and greater, at least keeping up with inflation. You want to own a good, solid company. And to get a return on your investment, your company must be profitable. Now, you have to think of this. You have to think of every investment as buying a business. And I know you're quoting Warren Buffett, blah, 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 blah. But no, it's really true. And when you understand that concept, you really don't give a crap about stock price fluctuations. Because a stock price fluctuation is meaningless trash. It doesn't matter where a stock fluctuates. That's why when you go back to, my videos in 2020, 2021, and you look at what I was saying, I literally looked at every company as a fundamental business. And if the stock went up massively, if it was a trash business that was losing money, and the stock went up massively, I called it a trash business. I don't care how high the stock went. I don't care how hyped up it was. I don't care that it was the future, bro. I only care about the fundamental business. And if the fundamental business is good, it's profitable, then I will do analysis and consider buying it. Just because it's a profitable business doesn't mean it's a good deal. But when you explore the concept of risk on, what you're saying is you don't care about the fundamental business. You're just hoping that somebody else will buy your highly unprofitable, share diluting trash from you. Now tell me, ladies and gentlemen, is that investing or is that gambling? That's freaking gambling. Look at the stocks that Jeremy buys. There are a couple stocks that I don't think are bad, like Meta. I actually bought Meta too. Me and Jeremy actually have the same stock. I think we own it for two entirely different reasons, because I don't think his investing philosophy really matches mine. But if you look at his stocks, every single one, if you look at them from a fundamental business standpoint, they are hot garbage. Now, everybody thought these stocks were great during the insane bull run of 2020, 2021, because they went up. But I looked at them, and it was very simple to me. I saw massive unprofitability. I saw share dilution. The only good thing was revenue growth. And I said, this is garbage, okay? And look what happened. If you buy a business like the ones Jeremy are talking about, you literally have to rely on Wall Street going risk on to buy your assets, as opposed to buying a good business that will eventually reflect its intrinsic value at some point, because there is actually something, there is real profitability, there are real earnings underpinning that company, okay? Never listen to somebody that is relying on market trends to make a buck. It's all about buying a good, profitable, preferably growing business at a good price. I don't know why this is so hard for you people to understand. Now, I know it gets exciting because you can get extremely lucky. You can get extremely lucky and buy a trash, unprofitable business that 10x's. It's possible. Is it unlikely? Yes. Now, if you buy 20 stocks, 20 stocks like this, or even 100 stocks like this, 95 to 98% of them are going to crash massively and never recover. And even if you have 1 or 2 10x stocks, at the end of the day, you're not going to make money. You're going to still lose money massively. And you can actually see this in Jeremy's portfolio. His long-term portfolio is in the red. I don't know if it's his public or private portfolio. I don't get like how he divides his portfolios. But his like big portfolio with Tattooed Chef and Honest My Bonest and Corsair, it's in the red long-term. That's ludicrous. You should, if you've been investing since 2008, during one of the most insane bull rallies, bull markets that we've ever had. I mean, I started investing in 2011, 2012, and I've almost doubled my money with a freaking index fund. That includes international stocks that have sucked. If you're negative, you are the worst investor. You're even worse than the average investor that they show in those bar charts. There's actually a bar chart that shows like how the average investor has performed compared to different asset classes. And even the average investor got positive returns. And if you look at Jeremy's portfolio, it's negative for the long run. And if Tesla wasn't in there, if Tesla crashes, he's going to be massively in the red. Okay? So yes, I harp on Jeremy a lot, but he really is like the perfect example of what not to do. Complete irresponsibility, relying on risk on. Whenever I hear that, if somebody says, I'm just waiting for risk on, that just tells me you buy trash stocks and you don't care about the fundamentals. You just hope that somebody buys massively unprofitable trash from you, okay? That you might as well buy a cryptocurrency if you're going to buy that. I mean, a lot of these companies that he has are the same thing as a cryptocurrency. So never use risk on, risk off in your vocabulary, okay? That's the dumbest freaking phrase I ever heard. I'm sure that came from Wall Street and Jeremy copied that, but it's true, okay? Max your tax advantage accounts. This is so hard. Max your tax advantage accounts by globally diversified index funds, VT, and stay the course. Do not sell. Market up, market down, market crash, recession, gas prices to the moon, doesn't matter. Buy consistently, hold for the long run, never pay taxes again if you invest in a Roth in the United States, and you will crush people. You will crush people like Jeremy that are so desperate to be rich that they just shoot themselves in the foot. And they're so desperate to have other clowns buy their trash stocks from them, all right? So hopefully that motivated you. I just got done with the gym. I'm sweaty. My nipples are hard. I'm going to go inside Food Lion, get some food, and then I'm going to go home and have dinner. Talk to you later.